Brigade Hotel Ventures in focus. They're betting big on premium hospitality. The company plans to nearly double its hotel portfolio by FY30 with a 3,600 crore expansion plan. Before we speak to Manoj Agarwal, the COO of Brigade Hotels, let's get in Mahima to set that conversation up.
Hey, Tamanna. So you correctly mentioned, they have an aggressive expansion plan going ahead, plan to nearly double their hotels in room count by FY30. Luxury-led growth is what they're targeting. So 49% of the upcoming pipeline is going to be in the luxury segment. The target from here on, because occupancies are at the peak level, they're expecting the ARR, that is average room rate, to grow from 7,500 to almost 14,000 post the expansion that they've planned. In terms of the funding part of this expansion, around 60% of this is going to be funded via debt, but the management has said that they have enough internal accruals to pay off that debt as well. So it'll be interesting to understand as to how this expansion will fare from here on, plus what is the demand scenario like in the luxury segment, and of course the entire Middle East Asia crisis, how has that impacted, and what is the recovery course like from here on. So this is the entire perspective of Brigade Hotel Ventures.
Got it. Okay. All right. Thank you so much for that, Mahima. And in fact, my pleasure to introduce the management, Manoj Agarwal, COO, Brigade Hotel Ventures, joining right now to talk about the outlook going forward. Mr. Agarwal, thank you so much for taking the time. Let me start by asking about the prospects on the ground, because there seems to have been quite a bit of resilience even in the first quarter, despite the kind of challenges that the industry as a whole faced, travel and tourism, with regard to international travel. It seems that domestic has made up some of that lost ground. So can you give us a sense of how Q1 has panned out and what the scenario on the ground is right now?
Hi, thanks, Alex. Very good morning, and thanks for having me on the show. Yeah, you are absolutely right, Alex, that the West Asia crisis had given a bit of a shock in the beginning, and March suffered a lot because that's where it all started. But you are very right that the condition on the ground has remained resilient in terms of the domestic demand and the domestic travel. Occupancies did not get hit that much, and we managed to cover our occupancies with the robust domestic demand, both from leisure point of view and from business travel. And although we had our share of international traffic as was less, but domestic demand was more than good enough to offset that, and we maintained across our portfolio. We maintained our occupancies. April and May were little softer, but then June onwards it picked up fast. And currently the pace for this coming month of July and August is looking also very good. So what I would say is that although these kind of conflicts or situations may give a little bit of shocker to the industry, but I think in this Indian hospitality industry has shown time and again that the domestic demand is very strong and it keeps the industry going.
So just tell us about this plan, Mr. Agarwal, Tamanna here, to nearly double hotel and room count by FY30. What is that looking like? Is the capex in place? Any fundraise required? In which areas will this room count be doubled? What is the strategy and focus here?
Yeah, so strategy was very clear to keep increasing our footprint, to strengthening our footprint in the areas that, in the regions that we currently operate in. So if you see, our entire pipeline is focused primarily towards South Indian cities where we are already present. With 9 hotels, we are already present in our southern Indian cities of Bangalore, Chennai, Mysore, Kochi, and we are further strengthening our footprint within these markets because we fundamentally believe that the southern Indian markets are really strong across the segments, whether it's business travel segment or the leisure segment. ARRs have remained resilient. The occupancy has remained very strong over the years. So we will be strengthening. The strategy is to further strengthen our footprint. We are coming up with another 1,700 keys which will be added in these markets. Of course, we are venturing out also. We are now doing another hotel in Hyderabad as well, which will be a very marquee landmark kind of a hotel, one of the tallest building in that region, which is an intercontinental that we have planned there. But yes, the majority of our expansion is coming in South Indian cities. Karnataka has the major footprint, and then we are venturing and further strengthening our presence in Tamil Nadu, including Chennai. And we are venturing out to do hotels in Kerala also. So Trivandrum, we are doing a Marriott, and we are doing a very high-end resort under Ritz-Carlton brand in an island in near Kochi. So all in all, 1,700 keys are added. We are now strengthening our portfolio towards the leisure segment, because we believe that leisure segment in India has more potential and capacity to grow. India is moving towards premiumization now, and the higher segment demand is very robust. So
and how are you funding this 3,600 crore capex, Mr. Agarwal?
So 3,600 crore capex currently, after IPO last year, we did our IPO last year, and we repaid all our external debt. So we are currently in a zero debt kind of a situation. We are a net debt positive company. And for executing these 9 hotels, we will be going in for construction finance. Approximately 2,000 odd crore will be financed through construction finance over the execution of these projects over the next 5 years. And the balance, around 1,200 crore, will be funded through internal accruals. 400 crore we have already spent so far on these projects.
Okay, and why the focus on luxury hotels? What is the kind of thought process there?
See, if you look at our portfolio, currently our portfolio is more heavy in the upper mid scale and upper upscale segment. So we don't have too many luxury hotels in our portfolio right now. So first strategy was, of course, to make the portfolio more balanced in terms of the business segments that we present in. So we have added more luxury, but as I said earlier also, the whole fundamental and the structural advantage that luxury segment currently has in India is better than the other segments according to our strategy. We think that the luxury will continue to perform better in India because of the higher demand potential that we are seeing in that segment. So luxury, now the rates across India, if you see in the luxury segment, is growing better than the other segments. And also the barrier to entry is more in the luxury segment. I mean, the new hotels which are coming up in the next 5 years are more towards the upper mid scale and upscale segment, and towards more tier 2 and tier 3 cities. But the luxury hotels within tier 1 markets will still continue to remain in the short supply. So we see a demand supply kind of positive advantage in the luxury segment, and that's why we want to increase our presence in that segment.
Got it. Manoj, good morning, Neeraj here. Wondering, I mean, for you in Q4, revenue growth had lagged the RevPAR growth, right? And because of F&B not quite doing well, could that be the case in Q1 as well? I mean, did the Middle Eastern conflict in some sense have an impact on your properties in and around wherever you have them? And can the things change now that things are a lot easier on the geopolitical front?
Yeah, so Q4 was actually got a little bit impacted because of the F&B. Some markets perform a little differently in some of the quarter, and it always happens because all said and done, there are cyclical impacts on the hospitality industry. Last year in Bangalore was the Aero Show year. This year was not an Aero Show year. So that kind of impacts a little bit. While coming on to this quarter, of course, we face some cancellations of the large-scale conferences and large-scale MICE events. So that has impacted a little bit on the F&B side in this quarter as well. But having said that, as I said, we in spite of the impact that we have seen, reduction of foreign travelers has been compensated by more than enough by the domestic demand. So our RevPAR growth remained very strong. Still, we will be closing to near double-digit kind of a RevPAR growth. Although F&B will not see that kind of similar growth, but it will still show some growth over the last year on a year-on-year basis. So the growth has not been as expected, but still there has been growth on the F&B side as well. And now, as we are seeing this conflict getting easing and travel resuming on its full course, this quarter is looking strong.
Mr. Agarwal, thank you so much for joining in this morning and speaking to us about what the plan is for Brigade Hotel Ventures.